the euro and the DXY just did something they have not done in 12 months, and that is going to affect what we get in July. So in this video, I'm going to have a complete trade plan for you for the DXY, the euro, the pound, and the Australian dollar, because I know a lot of you guys have asked for that pair. So if you are here watching this video, you are already ahead of 99% of the market. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So let's kick things off with the DXY. Okay, this is kind of my North Star for the market, not just the Forex market, but across the board. And looking at the monthly time frame, because we just had the June candle close, and this market, as well as the euro, did something they have not done in 12 months. And again, that is going to affect what we get in July, because this is big. Okay, so looking at the DXY, you can see where we have the market, as we've discussed before, the market moving off of this channel support. Now, we spent a lot of time here. Okay, we spent a lot of time here. As you guys know, the DXY has been sideways now for about a year, over a year, and we did get the market now breaking out of this pattern. So let's take a look at this here. And what you'll notice here is on the monthly time frame, we basically have what amounts to an ascending triangle that formed over the past year and a half, right? So you can see here, the market got squeezed here into support. We did get actually a wick all the way down here. However, for the most part, the market closed above here on the monthly. And this is why I've been saying now for a long time that getting bearish on the US dollar longer term didn't really make a lot of sense while the market was holding on to this here. Now you can also see where we have this descending channel as well. Okay, so all these lows back here, you can see the lows through here, and the market is once again moving off of this area. Okay, so now before we go on to a 4-hour time frame, I also want to point out that we have inefficiencies here from that 2025 drop. Okay, so oftentimes inefficiencies like 103.7, this level up here around 106, these inefficiencies tend to get filled, okay, or retested by markets because markets seek that efficient auction that it lacked back here. Okay, so this is going to be something to watch. You can also see where coincidentally this 106 level could actually come into play at the top of this channel, depending obviously on when we get the retest, if we get the retest from the DXY. So this is my North Star. Now here's the problem though with this for most traders is that they see this right here and they think, okay, I'm going to go buy the US dollar. However, what you will notice, even on aggressive moves, you often get the market retracing into the previous candle a bit. This goes for the monthly, the weekly, the daily. So what that means for this market is that we have inefficiencies down here in this region, specifically 100.5, that could be retested or mitigated before we get a continuation. So let's take a look at this now on the 4-hour. And before we do that too, if you're looking for the best place to trade the Forex market, commodities, crypto, whatever it might be, then check out IC Markets, because right now with my link, they are going to give you a 100% deposit bonus up to $1,000. So if you deposit $1,000, they're going to give you an extra $1,000 to trade with. And on future deposits, they are going to give you a 50% deposit bonus up to $25,000. So that's $26,000 in total that they are going to give you to trade with. So check out my link. It's in the description of this video. I'm also going to post it up here at the top. So click on that card, head over there, fill out the application, and you're good to go. Now, additionally, anybody who deposits $10,000 or more into their account, I am going to give them lifetime access to our Discord group, as well as the full SMC course. So I'm in Discord every single weekday, helping members, posting my trade setups, and also sharing my trades live. So be sure to check out that link in the description of this video. So with the DXY right now on the 4-hour time frame, you can see we still have inefficiencies down here. Now, do we see the DXY get all the way down here in this area? In my opinion, it's unlikely. And it's unlikely because we have the market essentially moving off of these lows, right? You can see the trend line here that we've built up over the past couple of months. So I do think a drop all the way down here toward this inefficiency seems a bit unlikely as of now, okay? Now, additionally too, just one quick note on the daily time frame here for the DXY. We've talked about this a lot, but this back here, guys, is when I was flipping bullish on the US dollar. So you can see the highs back here. We took out this high, and this was an external high following this BOS. So we had the close below, we had the close above. This right here was a bullish change of character. So on this bullish change of character, I was looking for a higher low to form down here in this area, which we clearly got. Okay, so looking here again at the 4-hour time frame, what I'm looking for as we move into July, because again, the June candle just closed. So what you have to understand about markets is that the market tends to retrace some of that previous candle. And you can see it on the 4-hour time frame, you can see it on the daily, the weekly, etc. Markets tend to retrace into those imbalances. So specifically for the DXY, what I'm looking at is from this protected low down here. Okay, so this one right down here around 99.4 up here to this recent high. Okay, so what I'm looking for is the market to push down here into about this 50%. Preferably we get down here below it. And this is why too, again, you can see where this trend line comes in here. This is why I'm not confident that we're going to get all the way down here for the DXY. We could, okay, it could happen. But with this trend line coming in here, down here around 100.4, 100.5, I think this is the more likely area if we see the DXY pull back further. Now, it's tempting to see this price action here and get bullish on the DXY, okay? However, again, we just opened a new monthly candle. The June candle just closed. You've got to be careful. Do not chase this market into the highs, okay? That is the worst thing you can do. I could be wrong. We could just continue to move higher, but the worst thing you can do, especially at the start of a new month, is to chase a market into highs like this, okay? So in my opinion, what we could be looking at here for the DXY, if we go to something like a 1 hour time frame, is you look at these highs right up here. If I snap a channel tool, okay, off of these highs up here, what you can see is that we could just be getting off of these two highs and this current high, we could be getting the market kind of flagging into a bull flag, okay? Now, nothing says the market has to do this, okay? I could be wrong. This is obviously very early stage, but we could get something like this, okay? And this would be ideal from my perspective. Okay, we get the market reversing from here, maybe a bit higher, but we get the market reversing from here and just kind of flagging into this. And then from down here, I'm looking for that lower time frame change of character for US dollar longs up to here toward 103 to 103.5. So this area around 103, 103.5, you can see it's the top of this larger channel. Okay, so this one right up here, we've got two touches off of this here. We've got these two lows. So this is what I'm watching. Now we also have an open gap from back here as well. And that's why, 103.7 specifically over the coming weeks is going to be on my radar. Okay, so bullish on the US dollar, guys. But first, I would like to see the market pull back into value down here into some of those inefficiencies that were formed back here in this region, specifically down here in the 100.4 to 100.5 area. Okay, so guys, there are chapters on this video too. So if you want to skip around, feel free, but I do encourage you to watch this in its entirety. Okay, so looking at the monthly time frame here for the euro, what do we have? We have the market giving us the lowest monthly close, okay, since all the way back here in, guess what, July of 2025. So this is the first monthly close we've had outside of this range, okay? So you can see this range here, we had the range here, we have now closed below. Now, on first look at this, you would think that, okay, we're going to get a push up here into these lows. And while we could get that, there's one thing here that could prevent that. And we've talked about this many times. But if we look at the daily time frame, again, here is that change of character that we got back here. This is when the market flipped bearish. We had the close below this BOS back here. So one thing that could prevent this market from getting all the way up toward that level we just looked at on the monthly is this descending channel. Okay, so you have the market basically moving here within this parallel channel over the past really entire year. I mean, since 2026 started over here. Since that time, the euro has been moving lower within this channel. So in my opinion, what I'm looking at here, if we go to a 4-hour time frame, okay, let's take a look at this here. And by the way, if you do want to see exactly how I trade SMC full time, my complete strategy, check out the link right here on the screen. That is going to be a completely free SMC training course that will show you exactly how I trade. It's my complete strategy, completely free. All you have to do is click on the link, enter your name and email address, and you will get access. So with the euro on the 4-hour time frame, guys, what we're seeing here, obviously lower highs and lower lows. Okay, now one thing that we've done too is the euro has given us a BOS, okay, a break of structure down here below this low on the daily. So this tells us that sellers remain in control. So this is why I've said now for the past, few videos since this time that it's shorts only for me right now. There's no sign of a bottom. Okay, yes, we could get the market putting in a local bottom down here. In fact, that's my ideal scenario. It doesn't mean it will happen. Okay, and a few people commented in videos saying, well, if you're looking for the market to retrace into areas like above these highs up here, then why would you not long it down here? Why would you not look for longs? And the reason for that is that every single thing on this chart is bearish, right? I'm not going to long a market that's doing this. I'm just not. If it takes us, a week or two to get up here, then so be it, right? I've got other charts to trade. I've got a dozen plus charts to trade. Now, it might not even get up here, right? That might not even happen. And that's, again, kind of the reason why I'm not going to try to long a market like this, because there's also no guarantee that we do get the relief before the next leg lower. Okay, so you can see right now, the euro is kind of looking weak. We had this range that built up here on the 4-hour. We're starting to break down. But again, guys, I'm not going to chase this. I can't chase this. I'm not going to sit here on a new monthly candle and look for shorts here. I want to see relief first. Specifically for the euro, I'm looking at these highs back here. I'm looking at this low. Okay, here is our 50% level. Okay, so 50% right here at the highs. At a minimum, I need to see the euro take out these highs up here. Okay, I need to see the market get up here into like 1.148 or so. And then from here, I would be looking for that change of character to get short, okay, to ride this trend lower. So shorts only for me right now, guys, with the euro. However, we could see some relief here. But as I said, just to kind of answer questions out there, why would I not buy a market like this? Because every single chart here, okay, and I mean every single chart looks bearish, okay? Bearish change of character over here. We have a bearish break of structure over here on the daily, the 4-hour time frame, lower highs, lower lows. There's nothing to be bullish on right now for the euro. Okay, so in terms of targets here, looking at the daily time frame, obviously we have the bottom of this channel, right? So wherever this comes in down here over the coming months, that is likely to be a big time support for the euro. We also have lows like this back here. So right around 1.12. So zooming in here, you can see that these lows right here, this one, okay, and this one down here around 1.106. So those are going to be my two near-term targets down here for the euro. Again, I would like to see this market get up here above the 50%. Okay, I would love to see it get up here into this region first before looking for shorts, possibly testing these lows. Will we get there? We'll have to wait and see. Okay, but all in all, guys, I just want to be clear that I am bearish on the euro. I am not looking for buys. Even if we see relief, I am not looking for buys there. Now, looking at the pound, okay, let's take a look at this one here on the monthly, because this one's a lot more congested than the euro. You can see here, this is the June close. And for the most part, right, the market is still very sideways. Now, I do expect this to change. If the euro is breaking down, the DXY is breaking higher, then it's only a matter of time, in my opinion, before we get this market breaking down. But I did want to show you this because it does kind of highlight the fact that if you've been struggling with the pound, it's because the price action here, in my opinion, has not been as clean as the euro. Okay. So looking at the daily chart, you can see kind of similar situation here for this market, right? Lower highs and lower lows. Even though we're trapped within this larger range, we have the external low down here on the daily. Really over the past, few months, we have seen those lower highs and lower lows. So it's also shorts only for me with the pound. Now, if we look here at this high, okay, so this is our external high here on the 4-hour. So external high up here to external low. Now, this was also a new BOS. Okay, so this was a break of structure below this low over here. We got a 4-hour close below, giving us that BOS. So with this in mind, you can see where the 50% comes in, and this is no coincidence, comes in right here at these highs. Okay, so right around 1.332. Now, this is also very close to these lows back here. Okay, so you got the lows here and this high. So I would like to see the pound. It doesn't mean it happens, but I would like to see this market get up here in this region first into this inefficiency before looking for shorts. I'm not going to chase this lower. If anything, I will wait to see what we get at these lows, possibly a new BOS, and then from there a short. Okay, if that were to happen. So in other words, if we don't get this up here, I'm looking for a continuation and then some relief to get short. Okay, so there's always second and third chance opportunities within a trend like this. And there have been many, many opportunities within, not only the pound, but the euro and other markets as well. Okay, so still bearish here, guys, but I would like to see some relief. It doesn't mean we get it, but I would like to see some relief up here into this region first. All right, so let's wrap up here with the Australian dollar, which I don't talk about too often, but a lot of people have asked for this. So I figured I would cover it. Now, the monthly time frame, we are still range bound, okay? So this is a range going back to February. So all of these lows back here, you can see where June technically closed above here. And you can see where we have these highs back here as well, okay? So there is some support here for the Australian dollar. And this is why, again, it's important to not chase. As tempting as it might be, it's important to not chase this because we have the market coming here into these lows. And we also have too, if we look at the daily time frame, right, you've got the market essentially range bound. We have the BOS back here, the break of structure on the way up, okay, making this the external low. This is still intact, okay? So in my opinion, I would like, just like these other markets, if we look here at the 4-hour time frame, okay, you can see where this was the last BOS back here, making this up here the external high to external low. So what I would like to see is the market essentially get above these lows, okay? And this little blue dotted line you see here, this is what's called a single print. So in TPO terms, that's time price opportunity. A single print is simply a thinly traded area. So what that means is that the Australian dollar spent one 30-minute block right here at this level on the way down. Notice all these displacement candles. And it just so happens that this right here okay, this single print is actually right at the inception point of this move. So if you'll notice this displacement, okay, this move back here occurred or started right here from this low. So, I mean, in the ideal scenario, guys, in the perfect world, we get the Australian dollar coming up here toward 0.6995. Okay. Will we get that? I don't know. I don't know if we will. But this is the ideal scenario. We get the market coming up here, and then I'm looking for a lower time frame change of character to get short with targets like this external low. Okay. So ideally, again, we're looking, I'm looking for shorts up here in this area to get short with a target down here. I truly hope this video has helped. If it has, then be sure to subscribe to the channel and also check out that free SMC training right here on the screen. Click that link, enter your name, email address, and you'll get access. It is completely free. All right, guys, trade well out there. I will talk to you again in tomorrow's video.